Used car prices surged past $30,000 as supply shrinks, according to an article I recently came across. It talks about how a shortage of 3-year-old lease returns and growing trade ins is causing a spike in used car prices. Basically, this tightening supply is shrinking the gap between used and new car prices, which says a lot considering how overpriced new cars already are. I mean, the average price or the average transaction price of a new car today is about $50,000. So it's insane that the used car market is this bad. And I've said it before and I'll say it again. The used car market is a hot, nasty mess right now. There's just not enough quality inventory. The good cars are hard to find and prices are sky high. This article points that out, and it says that the average transaction price for used vehicles that are 3 years old or newer surpassed $30,000 in the first quarter of 2025, and this is the first time it's reached that level since 2023. Now, the gap between lightly used and new car prices has narrowed to just $17,000, the smallest margin since 2022, and basically that this is due to the lingering shortages from the COVID era. Now, here's the situation. I don't think these numbers fully reflect how bad it really is. The overall inventory in the used market is just not there. If you're trying to find a quality used vehicle outside the retail space, you're going to struggle. Once you look into the retail space where vehicles are at least somewhat decent, you're going to get hit with sky-high prices and ridiculous interest rates. I mean, we have companies like Carvana and CarMax that are taking advantage of this low supply and high demand, and they're maintaining these high margins on these vehicles. And now, under normal circumstances, these sort of companies would struggle because they overpay for a lot of these used cars and they couldn't get away with being profitable by buying these overpriced used cars and trying to sell them at ridiculously higher prices. But because there's such a shortage in the used car market, they can get away with that. And they can charge these prices because there's such a limited inventory, basically a direct result of the COVID shortages. Now, here's the thing, the new car market, you might at least find some desperate dealers willing to give you a deal. Sure, new car prices are generally overpriced, but certain models and brands have a glut of inventory they're trying to clear. So many dealerships have to cover their floor plan costs, and as a result, they're more willing to offer discounts in specific situations. Now, that doesn't mean you'll get a great deal, but at least it might be better than what you'll face in the used market. Now, at the end of the day, I'm not sure how long this situation will last because with tariffs and trade tensions ramping up, it's very likely that the new car inventory could start to shrink. I've been noticing this with a lot of dealers. It could also be because many dealers lost a lot of money trying to move their 2024 and 2023 units, and they had to resort to deep discounts. Now, they might be a little hesitant to take on new year models as a result. Now, at the same time, with these tariffs coming in, I can see a lot of automakers completely shifting strategies to go full on with the margin approach, basically reducing their inventory to keep these prices high and just relying on high margins and high profits per vehicle rather than selling a large volume of vehicles. Now, we know Ford, for example, have realized you can't have high prices and high inventory, and it looks like now they're going to try to shift towards maybe moderate or low inventory and still keep prices high. Now, at the end of the day, while this might work for them, it's going to be bad news for us consumers, because we need to replenish the vehicle supply inventory that was disrupted during the pandemic. And if that doesn't happen, these prices are going to stick around for quite a while. Now, normally you'd expect a feedback loop where high used car prices eventually encourage new car purchases, which then replenishes the used car inventory over time. But right now, we're stuck in a negative feedback loop. Basically, new car prices are high, so fewer people are buying. That means fewer trade-ins, which limits the supply of used cars. The limited used inventory then keeps used car prices high, and because used car prices are high, automakers feel less pressure to lower new car prices. And it's just a nasty cycle. Normally, we'd expect a positive feedback loop to kick in and bring prices down, but right now we're stuck in a negative one that's just bolstering already high prices. Overall, it's just a bad situation for consumers. That's why I keep saying I don't see the car market improving anytime soon. There's simply not enough supply to put downward pressure on prices. But let me know what you guys think of this situation. Links to the article in the description below. And if you enjoyed this, don't forget to click like and subscribe. See you guys in the next one.